Good morning. What's up, guys? We are live. Welcome back. Hope you guys all had a good long weekend, good holiday. Stayed in, saw family, whatever you ended up doing. Hope it was enjoyable and restful because we have work here to do this week. Let's have a good week. So, business first, as usual. We don't really have a lot to talk about, though. We had a Fed speaker, Goolsbee, spoke at 7:30 on CNBC, whatever. And at 9:30, I guess this is headline worthy, we have the White House Easter egg roll, baby. So let's get some bets going on that. And that's it. That's it. It's a clean day as far as news, which is always good for us. Now, as far as market inertia, here's what we're looking at. You can see that, and you remember the last couple of trading days, we really saw a lot of really range days. I mean, we ended up taking a lot of continuation setups, but it was within a range, really. So, is it a day to go and bet the farm on some big trend breakout? Well, based on the market inertia, the answer to that question for me is probably not, unless we end up seeing the market prove itself, right? So I'm heading into today thinking, okay, I'm looking for ranges, I'm looking for little channel reversion scalps, and if we can get a wide enough range, or a big reversion sequence, right? Then I'll take continuation. That's really my game plan here today. That's about it. As far as the market, we're down about 1.5% coming into the opening bell, which is in about 2 minutes here. So nothing crazy. Just your typical trading day, news free essentially. By the way, always on the lookout for tariff headlines. Those hit randomly. So in a market condition like we're currently seeing, I would heavily encourage all of you to use live stop orders. If you're trading really small and you're taking big, long intraday trades that take, 2, 3, 4, 5 hours, then you could probably get away with no stop, but you have to be aware that those tariff headlines can move the market hundreds of points in a few minutes, so you should be ready to manage at any given time. I wouldn't really be putting a trade on and walking away go have lunch for 2 hours with no stop. Not in this market, at least. You can do that if you're more of an intraday longer, again, 3, 4, 5 hour trades kind of person. But in this market, I think I'd probably protect myself. It's just not worth the off chance that you come back and the market moved 1,500 points against you. So, all right, guys, good morning. We're coming into the bell 60 seconds out. What are we trading here? I will be trading. What am I trading? I think I have another Apex account that I didn't. Yeah, I do. I forgot to activate it. Past eval. So I guess this is what we're trading here today. Too late now. This is what we're doing. We're doing, what is that? 7 funded Apex accounts, 2 take profit pros. So I think that's the same as last week. So we'll stick with that and see what we can put together here today. And then tomorrow we should have an extra Apex account. Maybe 2. We'll see. So that's what we're doing, coming into the opening bell here, 25 seconds out. Are you guys trading evals or funded here today? Curious where everyone's at. Michael's trading eval. Half past, cool. Eric, both old school eval, scrumptious eval. Good morning, guys, by the way. There's the opening bell. Let's see what we get. Big old pump into the bell. Peter, funded 50 and 150. Cool. Rufio, funded. Adam, evals, exposed evals. Zachary, evals. Joel, funded. All right, cool, guys. We got a good mix. Did you guys write? Now, here's the question I really want the answer to. Did you guys write out your business plans yet? It takes 2 minutes. You need 3 things. Write down, okay, how much per month on average am I willing to invest in my prop trading business? Then, okay, how long on average am I looking to hold on to each funded account? The answer is not going to be forever, because if you're looking to hold on to it forever, you're trading way too conservatively. But you also shouldn't be going through accounts every 3 days. That's ridiculous. So the answer for most people is going to be somewhere between really, really aggressive size, like trading too big for the account and knowingly doing so, a few weeks, up to, maybe 6 months for more conservative people on average. And then number 3, by the way, the reason I put that in there is so you know how big to trade. Number 3 then is, okay, what am I looking at as far as revenue generation? And if you don't reach the revenue generation goal, you should continue scaling horizontally, or you go back to number 2 and maybe trade more aggressively within reason. Okay, you don't want to be blowing accounts every 3 days. It's not sustainable. All right, getting a lot of, again, this is institutional orders off the open, so I gotta let these clear and see what we can get from here. V Gibbs, hey Nico, grabbed a 150K Apex. Would you start with purely small scalping it, or trade your 40-point stop, take profit strategy that you have been doing? Well, let me think. With a 150, what I would do is trade the same way I've been trading, but just change the size. So, for example, my take profit pros are 150s, and I'm currently trading, a lot of you guys are going to think I'm trading 4 minis. No, I'm trading 4 micros. You don't have to trade big. There's plenty of money to be made in micros. Again, that's the scaling horizontally versus scaling vertically mentality. Everyone tries to scale it vertically and go really big per account because, oh, it's cheaper to do it that way. Well, it's not, because you never end up making any money because you blow all the damn accounts. So scale horizontally and just take it slow, scale out, have a lot of accounts, use a copy trader you trust, have your finger on the pulse at all times, know what's going on in your copy trader, try to avoid glitches to the best of your ability, and at least maintain the accounts for at least a few weeks, if not a few months on average. Again, that's how aggressive you should be, is how you get that answer. And you won't know for sure after, months and months of doing this and however many sets of accounts you end up going through. But I don't think you should come into this thinking, yeah, hey, I'm going to hold on to these accounts for, 10 years. I think that's probably not going to put you in the height of the bell curve, the middle of the bell curve, as far as being profitable is concerned, because in order to do that, you'd have to trade so conservatively, like 1 micro and take like 2 A++ setups a week, which is, it's going to be tough to get to payouts, at least consistently doing that. So don't be so attached, but don't blow the accounts in 3 days or a week and a half, right? Which is what everyone does, because they just, if I do this for, I'll get a 40K payout. I'll get 20 funded 50K accounts and I'll get a 40K payout in 8 days. And they trade 3 minis and blow it. And they do that 10 times and then they're like, I can't afford to keep doing this. It's like, well, it's kind of your fault. Exposed, I wrote it out, the business plan, and get this passed this week, being somewhat conservative, but going for 3 contracts today and the $300 a day goal, currently up 280. Cool, good work. So again, if you're just joining us here today, we have a light news day, which is cool. So we can just kind of trade to our heart's content here today and not worry too much about news aside from random tariff news hitting. So we'll see if we end up getting any of that. Again, still letting these institutional orders kind of process and fill, get out of the way here off the open. Jared, why would you not use one account and let it grow? It's a very good question. You can, 100%, but my thought process is like, a lot of people, they'll use 1 or 5 or even 20 at Apex, and they're like, well, I'm just gonna get a huge padding. Some padding is good, but they're like, I'm just gonna get like a $50,000 worth of padding, and then I can trade huge and take the record payout from Apex. And it's like, fine, if the record means something to you, then you should go for it. But the way that I look at this is like, it's not house money, it's your money. You could take payouts on it, assuming all the rules have been followed. Why not just take the money and then either invest it, or if you want, you can do the same thing, but use a personal account if you wanted to go that way. I think leaving like $500,000 or $1 million in Apex for the sake of just trading the Apex accounts huge is maybe a silly idea. That's the way I see it. But if you want to, the only reason to do that really is if you want to get the Apex payout record, and if that means something to you, 100%, fuck yeah, you should go for it. But if you don't care, then I think that that's a little bit silly. It's your money. You should get it in your account as quickly as you can. All right, little reversion attempt here out of the bears. Again, I like to wait until a couple more 2-minute bars here, and then we can start really looking for setups. Yeah, we'll see. As far as Zachary, as far as take profit stop loss point wise, my plan here is to stick with 40-40. If I adjust it, I'll let you guys know, and you'll obviously know when I'm talking about the trades. But I'm only going to adjust that if I really need to. Big old flush out of the bears here. Look at that. Look at that. Now, by the way, as far as my best estimate of the data, when you get little pumps into the open and through the open on very little news, if there's not really an obvious news headline that's giving it to you, or dump offs, by the way, a lot of people think, oh, it's pumping into the open, we're going to get a big bull trend day. In my experience, and from talking to other experienced traders, I'm pretty damn sure that the probability of that actually continuing is about 50-50. Okay, so I don't even think it's worth really caring if you get a pump into and through the open, if you get a dump into and through the open, unless, of course, it's coming off of data. If there's a clear news headline that's driving it, it's like, well, yeah, now it maybe is 60-40 or 55-45. But a lot of the times when you get a move like that, it's totally 50-50. And a lot of people get faked. I mean, look what just happened. You can get faked out, full round trip plus some. So I really think that first 5 to 10 minutes off the open is, for me, it's no man's land. If you make money, don't let me talk you out of it. But for me, that's no man's land. It's just institutional stuff going on. And I want to let that clear and let the traders come on in and allow me to have some kind of edge here with that self-fulfilling prophecy. Hope you guys are feeling good here today. You know, especially like after any weekend really, but especially after a longer weekend. I mean, me too, like it's kind of tough to put that hat back on. You know, it feels a little weird to come in the morning and you sit, you're like, okay, it's been a few days, like make sure I have everything set. Little mistakes become more common, like, oh, I forgot to, you know, activate this account in the copy trader, that kind of shit. Just take it easy. Forgive yourself, it's okay. Happens to everybody. But, you know, obviously that rest from the long weekend will pay dividends, I think. And by the way, yeah, Peter says every Monday is a Black Monday. By the way, you know, a lot of people, they come into Monday and it's like, okay, it's the highest pressure. Mondays and Fridays, everyone's always like, it's the highest pressure day of the week. I want to start the week off on a green note. I want to finish out the week and have a good weekend. I just want to be green today. It's a Friday and have a good weekend. Just relax. It's just a trading day like every other trading day. The fact that it's the start of a week or the end of a week is completely made up in our heads. And I get it. You know, I like to be green on Fridays too. It puts you at ease and helps you relax for the weekend. But if we're being honest, it doesn't matter. If you're red on a Wednesday, it makes no difference than if you're red on a Friday at the end of the month. Who cares? Right? So just do your best. I get it. It's hard. But do your best to free yourself of that mentality. It's not worth it, I promise you. To put that extra pressure on yourself. Oh, I got to start out the week green or else I'm not going to feel good about myself today. You know, I really want to have a good weekend. It's a Friday. I got to be green. Maybe I should just not trade today because flat is better than red. Just perform your best and do the best you can to feel good about that, regardless of outcome. All right, it is 8:40, so time to start looking for setups here. See what we can put together. One sec. All right. Look at this wiki behavior off the open. You know, it's always kind of interesting to think in the first 10 minutes of the open, especially on an open like this. I mean, it's really only about a 100-point move, right? But it's kind of crazy when it's so wiki how many accounts were probably just blown in the first 10 minutes off the open. And then, you know, those people are going to be hard on themselves and say, oh man, all my accounts are blown the first 5 minutes of the week. Not even of the day, the first 5 minutes of the week, and I blew it all. Just another trading day. Again, give yourself some grace. But I get it, it's tough. But Mondays, it's no different. Free yourself of that man-made schedule and the pressure. But, you know, again, I do think it's beneficial to hold off for at least the first 10 minutes. It's just institutional. It's just, you know what I mean? Like, it's really tough to find an edge when all the orders are being pushed through with a 3-week out mentality. I mean, where's the edge, right? They don't care what the price is within a couple 100 points here today. They're buying or selling based on their outlook for 2 months out or you know, 2 weeks out. Once we get really into the day and all that garbage is kind of done, obviously it's still going to be like 70% algos or something like that. But at least now we have more traders coming in and acting on your self-fulfilling prophecy that we can make money on. So starting to look for setups here now. That opening range is still developing here. Obviously, I do like to pay attention to what the 15-minute opening range is. I'm not huge on just trading off of that, but I know a lot of people are. That's cool. A little bit wide as far as volatility compared to pre-market, obviously, but it's only about 100 points, 105 points. So we'll see which direction we end up pushing here. Again, it's entirely possible we end up within a range pretty much all day. Look at that daily chart. We've seen a lot of range days the last 3-4 trading days. All right, here we are coming in for a little test of that bottom on the range. About 20 points out. If we could see a nice push through here, all of a sudden I'd be interested in a continuation downside. But again, I'm being very aware that it is likely today that we see a range day just based on the market inertia. Yeah, but if we end up breaking out and become some huge trend day, I don't care. I'll just trade what the market tells me. But coming in, I think you have to have some kind of bias based on the inertia of what the market's been doing, because it tends to continue doing what it's been doing until you see a change. Not every day is just like a total coin flip between range and trend. Okay, there is hints. There are hints, I should say. All right, 50 seconds left here on this 2-minute bar. We've been seeing about a 30-40 point range here so far this morning. Obviously, we had this one outlying bar. But I want to pay attention to this range here as well. Anything between like 25 and 70, I'm cool with. For that 40-point ratio I've been using a lot. I know a lot of you guys are hitting take profit trader. Have you guys taken daily payouts yet? Curious how many of you guys are hitting a daily payout account on, or whenever you're green or whatever, on take profit. It's really a nice thing. Apex, again, I think it's a good way to mix, or it's a good move to mix the two. Apex, I think you can scale probably bigger. But take profit can help you generate consistent revenue, which is obviously very helpful when you're trying to scale. You just take it every day. Curious if you guys are running that yet. All right, so we got that rollover, 1:40 out here. Coming in for a test of this bottom. We're getting a lot of buyers wicking these bars back up. I'm curious if we see that on this bar or if the buyers kind of give out. If we get a nice low close and it's a clean bar below that 15-minute range that's now been set, by the way. This here is the 15-minute opening range. Then I'm watching continuation. We'll see that. if we get that. Those buyers are wicking it right back up just like before. 50 seconds out here from the close of this 2-minute bar. There we go. There's a push. That's the break, taking out some long stops, right? Clear those orders out. Now let's see if we can get a nice low close. I'm still paying attention. You know, again, it's likely we see a range day here today, but I'm willing to take a small little bet heading down toward 18 if we can get a nice clean close. I don't want to see a wick back up in a close, which is what we're getting right now. See, we're getting those wicks on all these consecutive bear bars. These wicks back upside, buyers stepping in, wicking it back up. I don't want to see that. I want to see buyers completely laying down. Let's see the 5-minute and the 2-minute. Yeah, that's a big wick back upside. There's no trade there for me. Here's the rollover. See those bulls reclaiming the high of the previous bar. Takes a little bit of confidence to do that, by the way. Everyone's looking at similar charts, so well, at least this is the 2-minute, right? So how the information is expressed, it's going to look different, obviously different time frames, but it's all the same information. So you can get away with saying things like that. Look at this. Look at this. Look at this. Guess those buyers really came in, huh? You see all these wicks? I'm not seeing any headlines. That was quite the pump, huh? That's what I mean. Again, I encourage you guys to use live stop orders because stuff like that, you know, we've seen that happen hundreds of points in the last couple of weeks. Obviously, if you're trading big, which I'm a big, I'm big on trading small and then again scaling the amount of accounts you have. But big moves like that, if you're trading multiple minis, you can get in trouble quick if you're not using a live stop. Okay, Trump on Truth Social a few minutes ago. There can be a slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates now. I would assume he's talking about Powell. Yeah, he's talking about Powell. He said Powell is always too late, except during election period. Those two don't get along, do they? Mr. Too Late. You know, the thing about the Fed, and I've talked about this for years on the channel. The thing about the Fed is they're always, it doesn't matter who's in charge, they're always going to be late because the Fed's biggest concern is making sure they're right. Now, if I sat here, if we were at 0% on the morning and I came in really early and I said, we're going to have a 5% down day, that'd be an early prediction, and chances are I'd probably be wrong. We'd probably end up getting somewhere within the range of, 3%, give or take. But if we were down 4.5%, and then I came out and said, yes, chances are, we're probably going to have a 5% red day, or we're down 4.8% or something, it's like, yeah, no shit. But that's the Fed. That's how they operate, because the Fed cannot afford to be wrong, because if they're wrong, guess who's not going to be very happy with them? The American people and the people who put them up, or re-elect them, I should say. So their biggest concern is being right, even if it is embarrassingly late. right, and they're always going to operate that way. But, I mean, realistically, I mean, what other choice do they really have? They can make predictions and probably be wrong, but obviously that's not gonna go well with Trump. And by the way, if the Fed overcorrects, that's a huge problem. So they'd rather be a little late than overcorrect. So yeah, the Fed is always going to be embarrassingly late on basically everything. Elbow, steering the economy is like turning an aircraft carrier slow. Yep, of course. I mean, realistically, if Powell came out and just shot from the hip and made decisions really early, maybe he's right and he looks like a genius, but chances are he's either going to be wrong or overcorrect, and that's not a good look. Not for him, not for the Fed. It's not good for us necessarily. Well, the Bears are fading that big upside move that we saw. Now this, to me, we have about 2 touch points. I would argue that top is more of a flat top. Here, let me show you what I'm looking at. You can see kind of a flat top here maybe developing. And then we could see the early stages, maybe 2 touch points of a channel. So I'm watching that. Has to be considered. Obviously, that helps me determine whether I'm going to go continuation or range scalps. Now again, contextually speaking, these are the... by the way, listen, if you end up wanting to trade the way that I trade, totally fine. I don't care what you do. There's plenty of room in the market. But you got to be aware, if you're looking here, if we get like a nice downside push and an equal size bear bar closing at the low, yeah, if you zoom in, that's a continuation sequence. But what you need to be aware of here is, look, what are the bulls thinking? What's your enemy in that moment thinking? Well, I mean, they're thinking, hey, well, you know, look at this. Look at this. That's going to hold, baby. That's what they're thinking, right? So you got to be aware of kind of what every side is thinking to the best of your ability at any given moment, especially when you're looking for an entry. And hey, when you get a sequence that you're like, oh, that's a setup for me, and I enter, you have to look at the bigger picture and be like, is there anything reasonable in the way that would cause me to not take that I think flips the edge not in my favor anymore? Now, don't go looking at the 4-hour and the 1 hour and the 30-minute, the 15-minute, and the daily. But I like to look at the 5-minute, the 2-minute, and the daily. And if there's anything really obvious, like an obvious 2+ point trend line in the way of a continuation setup, I'm going to think twice. Because I know bulls are going to gain some confidence from that being there. That's it. A lot of this becomes discretionary, but you have to still have the robotic rules of like, when do I enter? What's my risk management? What's my take profit? It's going to be a mix of the two. You can see the bulls here stepping in. Here comes the rollover. And this looks to me like an attempt at a reversion sequence. We'll see if if the bulls can. And I mean, just like we talked about, right? The bulls are gaining a little bit of confidence here from that level. So here comes another test. Let's see if the bears can end up breaking that. Yes, 18,000 is going to be a tier 1 level. 40 points out. You guys wouldn't mind while we wait for a setup here, if you could just hit like on the video or the stream. I'd appreciate it. Helps out tremendously. All right, here's a hard test. We'll see if 18,000 takes precedence. All right, we got 30 seconds out here. I can tell the bulls are stepping in a little bit. They're putting a little bit of strength here in at the bottom of this bar. Right now, I believe this is a battle between that obvious trend line. The bulls are trying to buy that, a little overextension, and the bears are trying to take this down to 18. So I'm going to want to watch another bar here. Because we're kind of in that zone. I want one side or the other to lose. Even though that would technically be a continuation, I gotta wait to see this next bar here. If we close and we go below 18,000, closing near the low of this, if this bar ends up being a bear bar, then boom, that's a great setup for me, and I'll have to put that on. All right, minute 15 out here from the close of this 2-minute bar. There we go. All right, beautiful. Give me a nice close near the low of the bar, right below 18,000, even at 18,000, but preferably a slightly below 18,000 because that is a tier 1 level. That's something. That's given the bulls some kind of hope that, hey, maybe we hold 18. I want to take that away before I enter. "30 seconds here. All right, give me a nice little close right below 18, ideally. Here comes the rollover. And I got a horrible fill. I got a really bad fill, but I will sell that, so I'm now sitting short. That really was a bad fill. So I'm sitting, my average is at 17,986 and a quarter. Oh man, stop up at 18,026 and a quarter. Take profit down at 17,946 and a quarter. Couple points in the money. I'm not too happy, I gotta be honest with you, with that fill. 10 points in the money. 15 points in the money. All right, again, take profit currently sitting down at 17,946 and a quarter. My fill was about 8 points worse than I would have preferred. But that's okay, you gotta deal with what you get. Really was on me. I hit the button as soon as we rolled over and boom, we got a little flush. So let's see if we can get a move though. Again, currently about 8 points in the money. Do the 2-minute chart. All right, 22 points in the money. 25 points in the money. 30 points in the money. Come on, 10 more points. So a little push through 950. Which, you know, that's going to be a tier 4 level. It's no big deal. Bull's trying to start a little reversion sequence here. I'm not really buying it quite yet. All right. There we go. Need 10 more points. It's a little downside break through 950. Again, that's a tier 4 level. I'm not too concerned with that. There's the test of 950. It's gonna be a few point pop down through 950 and we'll get taken out. Come on, Bears, push it down through. Bulls are really trying to prop that level. Still about 30 points in the money. Bulls trying to take it back upside. Let's see if they can. Again, target here for me is down at 17,946 and a quarter. The Bulls really trying to hold that 950 region. I don't care about that level. It's just a tier 4 level. I don't find it all that meaningful, but we'll see if we can get a little push through. See if the Bulls can give up for just a few seconds here. All right, put in a new low on this candle. There's a new low on this candle. Still about 24 points, 25 points in the money here. Yeah, just need to see a small break of 950 to the downside. Need about 10 more points, 8 more points. There's gonna be a little push. There we go. And we are out there for a winner. There we go. Here's where we sit. Here's where we sit. So I gotta tell you, I was not happy with that fill. I got about an 8-point worse fill than what I intended, but that's, again, that's my fault. Just a little slow on the button. Everything that happens is my fault. But we're sitting up 2,000 so far here on the day. Okay, so not the cleanest trade ever, but I'm happy with it. I'll take that. So let's see what else we can grab here now. Michael, up 1,200. Good work. Now, after that big move, we're sitting 2.3% downside, so I am thinking it's not unlikely we end up forming a little range. You know, you guys know what we've been seeing lately. Big moves, in this case downside, and then things tend to flatten out a little and we end up forming a little range, even if it's descending, ascending, whatever. That's been very common. So I would not be surprised if we end up seeing that. So I'm kind of watching for that here now. Again, I want my 3 touch points. But if we just keep going lower, that's fine. I'll just trade continuation until it tells me not to. All right, I'll be right back. I gotta get some water. 2 minutes. Don't go anywhere. All right, we are back. And the bulls are still trying to take this thing higher. You guys see that? Here. Bears trying to take this lower, cover the low of the previous bar, but wick back up and close at the wick of this bar here. You see that? Just barely lower, actually. But it's close. And then you see this doji. That's an attempt at a reversal out of the bulls. Bulls then try to take it higher, and they get a little hung up here. It's all just psychology. There's no magic here. So we'll see if we end up in kind of one of those sideways or descending channels. Whatever. Trade whatever. Clark, any news today? No, it's a clean slate. We have the White House egg roll at 9:30 here. 17 minutes, 16 minutes out. But that's it. All right, now let's see if the Bears can make this continuation, or what I would probably expect to see is a little range forming, but I would want it to widen out a little bit. It's kind of tight. I don't like these sideways, horizontal top, like flat top, flat bottom ranges. They tend to be 50-50 and they tend to break hard. Kind of tough. It's tough to trade these little horizontal ranges, especially when they haven't developed yet. So for now, it's just a waiting game for the next few 2-minute bars, see what we can get. Hey, Nico, for something like this, would you need to see 3 bars in either direction for confirmation, or would 2 bear bars be considered continuation for your strategy? Yeah, so this is a very intelligent question, by the way. In a downtrend, like we're currently in, 2 bars would be enough, assuming we have cleared any hope of a descending support. Now, for reversal, like back upside, I would need to see 3. 2 just isn't enough for reversal. It oftentimes just ends up fading. But really, I mean, you see like this, continuation setups are great, but not when the bulls have that kind of argument. So I would need to see it clear any kind of argument like that, which is what we waited for last time. Ended up being a winner, but I had to wait because I don't want the bulls to have any reason to think, oh, let's all step in and buy, which could completely evaporate my edge. Right, so just gotta be patient to let everything kind of clear out. Bulls wicking this back up a little bit here. See what we can get on the rollover. Down 2.5% on the day, the Nasdaq is so far. All right, so we're a minute 35 out from the rollover here of this bar. Got a big wick up on that last one, so this one would need to be pretty decisive here. But I am interested. Yeah, Fear and Greed Index just hit. It's 19 out of 100, which is extreme fear. Again, not that we can really do anything with that information, but I like to pay attention to it. Just for kind of context, because I know a lot of people watch it. All right, Bulls wicking this bar back up. 40 seconds here to clean it up. Show you both time frames here. "17 seconds out from the rollover. If we can get a nice low close, but the Bulls are really holding this up. Everything ready just in case. Nah, big wick upside out of the Bulls. There's no trade there on that bar for me. See how this next one develops. Well, if you're just joining us, we have taken one trade here so far today. This is where we sit. We're up 2,000 so far. Little continuation short to the downside back here in this sequence. So seeing what else we can get here. I'm interested, really this to me looks like we're getting a little flattening out of this big move. You get a little flattened out and then a wide range. The deeper you go on the day as far as red, the more common that becomes, unless you just have a huge red day like we saw a couple weeks ago. Yeah, exactly. If we see random tariff news is never off the table, so keep an eye out for that again. Live stop orders heavily encouraged in this market. I wouldn't be swimming naked right now. You can see, in comparison, right, the Bulls, their confidence is increasing slightly, noticeably so. But we'll see if the Bears can step in and take that confidence away. Otherwise, I'm watching this. I'm not a big fan of buying aggressive descending supports like that, but it would be enough to discourage me from taking a continuation if it lined up exactly with that level. So I want to make sure I know that that's there. Again, eyes on that descending little support level, see if that ends up holding. I don't want to sell the rollover right into that, because I know the Bulls are going to try to buy it. Just a question of can they. Now, if you're buying that descending support, again, that's not a trade that I like to take. But based on the most recent attempts, right, I wouldn't necessarily be looking for like 40, 50 point targets. It's more likely that we get a little soft bounce. So trading aggressive channel reversion like this with a big, deep descending support level, I think small targets tend to work best. But also the more aggressive downside that level is descending, right? You gotta time it properly, which means usually if you're gonna scalp that, negative reward to risk. Because you're looking for a small little bounce, but you want to give it room to time it properly, because you could see a 15-point overextension and then have it still bounce, right? So usually ends up being negative reward to risk, which is fine. That's not a bad thing. You just have to have a high win rate. So common. So common. You get a big aggressive sell-off, and as you get deeper and deeper, you're asking more and more out of the bears, right? You're asking for more bears to sell lower, which the probability of that occurring starts to fade, unless you have a big news headline, right, or some reason. But we start to get a little bit more bull confidence, and you flatten out slightly. So common. To the upside as well, by the way. Scooby, I've been watching trading psychology videos over the weekend, identifying when and how dopamine starts affecting trades. A study found that it hits not only a win, but when close to a win. You know what's really interesting about trading psychology? And this plagues a lot of traders. Really listen to what I'm about to say. A lot of you probably struggle with this without even realizing it. This is extremely common in gambling addicts, okay? I'm not calling you a gambling addict. I'm just saying your brain is wired the same as people who fall into gambling addiction, more or less. We're all human. It's all relatively similar. Obviously with slight differences. But the quote-unquote rush, or the feeling you get of when you avoid loss, like when you're deep in the red, 200 points, and it comes back and you make 20 points. For a lot of people, that feels better than just a flat out win. So a lot of people end up addicted to the feeling of avoiding loss more than they just enjoy winning. And that's really a tough situation, because what that means is, you know, you start moving stop losses, you start removing stop losses, you start putting trades on thinking, well, if it goes against me, it's, you know, that's okay if it goes against me a little bit. I've avoided loss already 2 times today. And you need to understand that that's kind of an addiction, right? You know, you stop stopping yourself out because, well, hey, it came back last time. And let's be honest, if you're sitting deep in the red on a trade and it comes back and you get out at break even, or you get out at a little bit of a profit, there's a feeling there. It's not a bad feeling. It's a big sigh of relief, kind of like, oh, okay, like, got away with it, right? It's there. It's okay. But that plagues a lot of people. We still good on the stream, guys? We still good? Okay, yeah, I think there was a minor glitch. Anyway, Eric, yeah, you just described my #1 issue. Yeah, listen, guys, it's an addiction. It really is. That feeling of avoiding loss, it's addicting, okay? And that's why a lot of people end up gambling addicts. It's not about winning, it's about avoiding. It's about going, putting on risk, and not losing. It makes you feel above the odds. Just don't put yourself in that position by, you know, taking on huge heat. Starbuck, is that why you say trading is a game of subtraction? Yeah, listen, if you can just remove the bad habits and then have a few good setups that you follow, be patient, and not make those stupid little errors, being profitable becomes a lot more simple. Now you can see here, we get this big downside move. We're still flattening out, okay? Bulls are having a little bit more confidence now than previously. That's normal. You know, we're 2.5% down. The deeper you get in the red, the more confidence the bulls have buying the dip, unless you have some big, huge, fearful headline like we saw, you know, a couple weeks ago, which leads to big bleed-off days. Bob, very interesting, Nico, about the joy in the comeback, thought-provoking. Yeah, you know, listen, I think a lot of us, obviously some more than others, I think there is an aspect of genetics here, but most of us, statistically speaking as well, and by the way, we are waiting for a setup here, we're just seeing things flatten out, I'm keeping an eye out. Most of us, the reality is, if you bought one lottery ticket and won millions, most of us would probably at some point think we could beat the odds again. Unless it was like you're not even interested in gambling at all and you just bought one ticket and then you're like, okay, well, I'm never playing again. Some people would definitely do that, okay? But a lot of us would probably fall into that like, just one more. I got lucky that one time. And we're all wired relatively similar. So, you know, none of us are above it. Just don't put yourself in that position to have those big comebacks that are so addicting to most people. It plagues so many traders and they don't even realize it. They're, you know, 180 points in the red. They come back, oh, break even. Oh, I made 10 points on that trade. Can you believe that? I can't lose. That feels better than just getting in and making 20 points and being done. Unfortunately. Because it's more of a roller coaster. It's more of a ride. It's more like fun. It's like, I don't really sports bet, but it's like your team's down by 30. They come back and win. That's better than just being in the lead the whole time, isn't it? To a lot of people, it's more fun, right? We're not here to like have that kind of crazy fun. You should enjoy yourself when you're trading, but not like that. That's a big problem a lot of people face. Eric, if you're scalping for 10 points, is it better to cut losses as soon as they don't go your way? I'm playing with that concept. In futures, I think that you should give it a little more room. What you just said is a great scenario if you're scalping like the front side of big momentum stock moves, like small caps. Cutting it pretty much as soon as it doesn't go your way is a great habit. In futures, since they're more efficiently priced, I think you should give it a little more room. Or maybe a little more time to work itself out is a better way to put it. So I would not scalp futures with like 5-point stops, because you're going to get chopped up and probably bleed 1,000 paper cut death. But, you know, if you wanted to run relatively tight stops, 15, maybe 20, 25-point stops in a normal market environment like we're kind of seeing now, fine, that still aligns with that concept. But cutting it immediately when it doesn't go your way, I think is a tough way to trade futures just because of their efficient pricing. Have you ever traded the orb? The opening range breakout. I assume you mean the 15-minute opening range breakout. Well, I kind of traded something similar to that today. I just don't really call it that. It's more like a continuation breakout setup to me. But you could argue that it's similar, but it's not the same. I'm not just selling the break of the range. A few things had to happen. Lee, that was my wife on our last cruise. Hit her first spin on a slot machine in the casino and realized quickly it's not always that easy. That's about the worst thing that can happen. You play once and you win. The best thing that can happen to most people is you head into the casino and you lose. You bring $100 your first time, you're like, this is gonna be fun. And you play like 3 hands of blackjack and you lose all of them. And you never go back. That happened to my now wife. We were just dating at the time. This was, I don't know, maybe 6, 7, 8 years ago, something like that. And we went to the casino, and she brought like a little bit of our money, and she played 3 hands of blackjack and lost all 3 and hasn't cared since. It's about the best thing that can happen to you. All right, Bull's trying to take this higher now. Let's see if we can get a little continuation setup going. Testing that 20 on the 2-minute, by the way. Here's what the 20 on the 5 looks like. Compare that to 2. All right, this bull bar here is shrinking, so I'm going to watch the rollover here since we were also at the 20 and see how this next bar plays out. Also have to pay attention to that 20 on the 5-minute, I'm sorry. About 50 points away right now, so this range really looks bigger than it actually is because the ATR is not huge today. Mid-20s. Bulls trying to push this a little higher, not doing so hot. Again, bears trying to hold this down right around that EMA. Again, I'm still watching. That 20 on the 5 minute is at 18,011. The range here is not super wide in terms of going continuation. Getting a bit of a push here. Okay, now 30 seconds out here from the rollover of this bar. Let's look here. If I could get an entry about 17,980 or higher, which is where I'd be comfortable. We're clear on the 2, but the 5, which is arguably more important, we'd have some between 25 and 35 points away is that 20 on the 5, and I know the bears are going to look at that, so I got to hold off here. And this bull bar on the 2 minute isn't even good enough for an entry anyway. Here comes the rollover. You see this shrinking? See these shrinking bull bars? Bears are attempting a little pullback sequence. We'll see if they can get it. But that's the opposite of continuation for me. Those bars are getting weaker. Now, a minute out here from the close of this 2 minute. I gotta tell you, this looks like, well, hey, if we get a growing bull bar here, that's a pretty clean continuation. It's not perfect, but it's clean enough to enter, right? I would love if that were true. It's just not, though. I mean, we're heading right into 18, and then, more importantly for me, is that ever so popular 20 on the 5 minute. And that doesn't give me room. I would need at least, like, 35 points. And that's 25 points, maybe. Once I were to get an entry. Before we come into this. And again, I know the bears are going to be watching this, and that can give them a little bit of hope. So if I'm getting long, I don't want the bears to really have anything reasonable to give them hope. And I see this ATR is down toward 25. That's about my minimum. We'll see if we can hold at least 25. If not, we may have to see a little adjustment here on the ratio that we're using. Those shrinking bull bars coming into play. Bears gaining a little confidence, retesting the 20 here now on the 2. Yep, 18,000 is on the table here. That's a tier 1 level. I don't trade only off the $1,000 levels, but they come into play for sure. Well, again, hey, while we wait for another setup, if you're still if you're just joining us recently here, we've taken one trade so far today. It was a continuation sequence through here. So we currently set up about 2,000. That's just one trade. We're trying to see what else we can grab. I'm open to range scalps with 3 touch points with the trend. The shorter term trend, that is. And I'm open to continuation if there's nothing in the way. So we'll see what we can get. But listen, while this works itself out, I will be back in a few minutes. Don't go anywhere. right, we are back. Yeah, that little bear continuation sequence, we started getting those. The same thing that we got to the bull side, just in reverse. All right, I appreciate you guys letting me know. We never really got a great setup. You get those weakening bars in the direction you're thinking. This is turning into a range with a little bit of a flat bottom. You guys know how I feel about flat bottoms. Not a big fan. I think we can go ahead and remove this. Okay, but this needs to work itself out. I'd prefer to see this little flat bottom either break or turn into an ascending support. But whatever happens, happens, and I will trade what happens. So what's up with you guys? How you guys doing so far here today? One trade for me so far. Bruce, 2 trades up 681. Old school up 227. Zachary, 1 trade up 30 points. Vinny, nothing yet. That's okay. Be patient. Rufio went from red to green. Cool, good work. And hey, if you guys go green to red, that's okay too. Just trade your setups, accept the outcome, and move on with your day. You have edge, it'll work out in the end. Scrumptious up 324. Good work. Chris up 1250 in an eval. Scooby up 1500 bucks. Mitz 259. Sean up 1.2. Cool guys, good work. Now you can see this is certainly turning into a bit of a channel here. But that flat bottom, those things are notorious for a high probability of breaking in the futures market. So you might ask, well, why don't you just short right now if that's going to break? Well, we don't know, right? It might take 10 tests to do it. With each test, the probability of break does get higher. But that's not a good trade for me to just short saying, hey, this thing's going to break at some point. But if it does break, and then it gives me a continuation sequence with room to any argument of a descending support, boom, that's a good trade for me. Joel up 950 in live accounts. Cool. Skeptic up 3R. Good work. Chris up 2K on a take profit trader group, rotated into new Apex group, down 1200. That's okay. Green on the day. Vinny, Wrench, are you trading a 1R? Well, I'm not sure what you mean. Yeah, I'm risking 1R per trade. This is, again, if you're just joining us here, this is where we sit so far on the day. That's just one trade. Obviously, I'm trading different size per account, but that puts us up about 2,000 so far on the day. Let's see what else we can get here. Okay, now the ATR on these bars, guys, is 24 points. Which is kind of tight, to be honest with you. So, ideally we can wind that out a little bit here. But right now I'm going to leave it as is unless we keep falling off as far as range. Jeff, does the trade copier you are using total all of the accounts like that, or is that something additional you have added? No, it just does it. I have no affiliation with Affordable Indicators. But they're like, hey, yeah, we'd love to give you a license here, and if it helps you show things. Because what I really wanted was this. I really wanted the total. There we go. And most trader copiers don't do that. But the affordable indicators one, by the way, as far as does it work well, it's not perfect. Okay, but that's because of the NinjaTrader ghost order problem. So it has that ghost position issue if you're using NinjaTrader. But this has been the best one so far that I've tested. I've tested multiple. And I'm using this one now permanently. But yeah, it lets you like total up per. What it does is it lets you filter the accounts and then total it. So you can have like, okay, how much have I made in the Apex PA accounts? How much have I made in Take Profit? How much have I made in Apex evals? And it totals all that. And then it gives you the actual total. So these are all obviously funded accounts. So the total is at the bottom right. Then it breaks it down per Apex and Take Profit. It's nice, but obviously functionality is more important. That's just convenient to know where you sit without having to do math all the time. And the functionality has been very good, but it's not perfect. Okay, so don't expect perfect, but it's close. Zachary, so a smaller ATR, you would go bigger than 40/40 or smaller? I'd go smaller with a smaller ATR. Joel, are your Apex and Take Profit Trader accounts both Rhythmic based, having issues connecting across firms? My Apex accounts are Rhythmic. My Take Profit are Tradeovate. Both, it's a give and take. I think Rhythmic is a little bit faster in my experience. It's probably like the more professional option, but Tradeovate seems to be easier and have less bugs. But with Tradeovate, the thing is, if you don't touch it for a while, it disconnects, which isn't really a big deal. I like them both. I don't know, I just mix them. But that's what I run. So yeah, if you're gonna run a similar setup to me where I'm mixing Apex and Take Profit, the way I do it, I would probably go just Rhythmic with Apex. And then, obviously Tradeovate with Take Profit. That seems to work well for me. Joel, use code BIG. That's right, baby. If you guys want those daily payouts, Take Profit Trader is currently 30% off with, here's the headline, no activation fee. So once you pass the test at Take Profit, there's no activation fee if you use code BIG. Which is obviously a beautiful thing, because believe it or not, that actually makes it cheaper than Apex in a lot of cases. But right now, Apex's deal is obviously great. It's 80% off and single day pass, which means you can pass the test in one day if you want. Justin, why Rhythmic over Tradeovate on Apex? I don't know, I just started with Rhythmic, and I have experience now with both, but I just keep it consistent with Rhythmic. Again, Rhythmic to me, it seems like the executions are maybe a little quicker, but it's not that big of a difference. Don't overthink it. It's not that big of a deal. So this flat bottom here is really causing some problems here. I want to see this thing break and move downside so I can get a little continuation set up. That would also help widen out the ATR a little bit, which would be helpful. Chris, do you need to have 2 NinjaTrader instances open to trade both? No. With my Rhythmic Apex plugin and my Tradeovate Take Profit plugin, they plug in simultaneously, multiple connections. But you have to have the multiple connections setting in NinjaTrader turned on. All right, here's the test of that flat bottom. I imagine we're going to see at least a test of a break at some point here. I mean, you look at this. We're getting softer bounces. Then closer and closer tests. They tend to break. We'll see if they can. So let's draw this and make it really, really clear. This is very, very obvious what I'm looking at here. But you guys see this. Again, don't overthink it. But this is what I'm looking at. I mean, these wedges here, they lean slightly in favor of the break downside, but I can't just short it anywhere because you might just see it bounce around until it eventually soft breaks this and moves upside, maybe 45% probability, or breaks downside, maybe 55% plus. Testing the 20 EMA and that descending trend line here on the 2-minute. This would really be a third touch point, but then that wedge starts getting really tight, unfortunately. So if that wedge was a little bit wider, that would be a channel reversion after we get a third touch point, rejection, and then a retest. But it's getting tight here now, so let's see if this ends up breaking downside. Again, with each test, it's like 50-50, but eventually these flat bottoms tend to at least attempt a break. So we'll see if the bears can take care of that. And again, when I'm speaking probabilities, we're not talking 90%, we're talking like 55%. Still making that test here. All right, so Trump done making comments as far as the news feed. Here's the test of the flat bottom. Let's see if we can get a little bit of a break. And with each test, it's about 50-50, but probability leans in favor of the flat bottom breaking. Eventually, that is. See, the bears really want to take this lower. These little flat bottom wedges that start getting too tight, these are tough. Because, I mean, you look right now, This whole thing's 30 points wide. Now, if someone's scalping with a small little ratio, this short here is not the worst trade. It's not great because it's getting so tight, and the tighter this wedge gets, the more it tempts breakout with each test of either side, right? That's not the worst trade in the world. That's not one that I can put on, personally. $20 points wide now here. It's getting tight. Tempting breakout, 50-50 now. Now, if we can get a nice little breakout here, push higher, and then get a third consecutive bull bar pushing higher, ideally growing and closing near the high, that turns into continuation. But again, I'm not convinced until we see that out of the bulls. ATR is still sitting in the mid-20s, pretty low. I expect after a breakout of this little wedge that will creep up a little bit, which is good for us. ATR, that is, right? You know, and by the way, a downside break of this little flat bottom, you look here, even if we don't get continuation downside, that turns this into a descending resistance with more room, because then we can delete the flat bottom if we were to see that break. So I don't really care which way this breaks, because we have trade setups kind of ready to set up no matter which direction it breaks. I just want to see this thing break. There's the bulls trying to take this higher. Still hanging up at that 20 on the 2-minute. DNA, trapped in a trade long from last Thursday. Market closed for holiday just after I took the trade. At the beginning of every week, look up, just Google stock market, or actually you should look up futures holidays. They're going to be different. The futures market typically doesn't close as often as the stock market does, but you can find all the information on the website. We just cannot get a decision here, can we? Bulls trying to take this higher. And not doing so hot, are they? This really just needs to break so we can finally get some kind of setup going. Again, if you're just joining us here, one trade so far today, up 2,000. we're not done. Trying to see what else we can grab if the market gives us something here. Another tester, this flat bottom. There's the break. It's about damn time, huh? Big break, too. Now let's see if the bears can hold this. We're a minute 25 out here from the close of this 2-minute bar. I'd prefer to see it closed rather than buyers wicking it back up and holding that flat. $55 seconds out from the rollover here. Now a retest, by the way, when you get flat bottoms breaking like that, retests are very common. So we'll see if we get one of those. Here's the retest. There's the rollover. That's an ugly wiki bar, huh? Kind of indecisive. Still, we gotta close. Well, here. 1 second. Just barely below this wick out here. But not the most decisive break in the world. Bull's got that wick back upside. So the next couple of 2-minute bars are going to be very telling, at least for me, as to what we have lining up here for setups. Well, after that breakout, ATR's creeping up a little bit. We're currently at 26.8. Which is good. I don't like to see that ATR dip below 25, especially below 20. Things start to get a little bit tougher. You just have, usually you end up with a lot more channel reversion scalps than breakout scalps, which is fine. But the lower that ATR goes, the more choppy those channel reversion scalps get. So sweet spot for me, somewhere between like 25 and 70 is totally fine. Probably on the low end of that, obviously. We'll retest that flat bottom there. Very common. Now, until we see something develop here, right now, at this very moment, this is kind of no man's land. But it only takes a couple of bars, realistically, to really develop a good setup. So, let's see what we can get. Rob, how many contracts were traded on that trade today? Not a lot. I think on this one here, I think the total comes out to like 23 micros, not minis. You don't have to trade huge size. Again, scale horizontally, I think is the way to trade prop, not vertically. Obviously, you scale personal accounts vertically, but that's a different story altogether. Prop, I think, should be scaled horizontally. And in most cases, for a lot of people, there's not really a reason to go up to minis for most of these accounts. Unless you're going to trade like one mini on a 300K, a set of 300K Apex accounts or something. Most of them, there's just not really enough room. You know, realistically. Unless you're trading them really aggressive, which can be done. If you're someone who's like, you know what, I'm going to blow through these accounts once every 2.5 weeks on average. Have at it. But you should know your data as to how long on average trading responsibly your accounts last. Okay, that's part of your business model. A lot of people, I don't think, understand that. There are expenses to prop trading. That should be worked in. We're really hanging out, by the way, right around that flat bottom, that previous flat bottom there. I'm going to go ahead and delete this because we're going to need to make an adjustment most likely on that anyway, but I'm going to leave the flat bottom drawn just for now. You guys can see we're kind of a little indecisive around that level. Yeah, Mark, it's pointless having 10 mini contracts on a 50K account with a 750 unrealized max loss. Yeah, because that 30% rule that Apex runs. So, I mean, think about this logically, guys. Why does Apex, this doesn't make them evil, by the way. Why do they allow you to trade big size? Because people want to. But you have to understand that that helps them. When people trade huge on a 50K account, with a $2,500 trailing drawdown, they're trading 10 minis. It's going to be a lot of blown accounts, which equals more revenue for the company. So by trading huge, you're kind of playing the game that helps them keep, you know, doing business. And I believe, you know, if you want, you should. You should be able to trade 50 minis on a tiny account. Doesn't mean you should. I think it's up to the person. Just make an educated decision, trade small. There we go. There's a nice break to the downside. All right, gonna watch this bar. Then I got to keep an eye on the rollover bar after this one. Mark, real prop firms want their traders to win. It's slightly different with online prop. It's just a different business model. Yeah, listen, I mean, online props, if they don't have winners, they don't stay in business either. It's a balance between the two, winners and losers, right? Without winners, there's no reason to buy a test. There's no reason to try the company if no one's winning. But in reality, it's no different than most, even personal account trading. Most people are going to lose. Some people are going to win. That's the truth with prop. That's the truth with, by the way, brick and mortar prop as well. A lot of people come into brick and mortar prop shops and lose, and they just get fired. Staying on the desk and actually like getting a job and coming into work every day and staying on the desk for years is the minority. The same with online props, just a slightly different business model, but hey, it's cool, it's an opportunity. And if you are, same with personal account, if you're one of the winning traders, that's a small minority percentage. Let's see if the bears can finally get kind of a backbone here and take this thing lower. The bulls are still, I mean, you see the mix. Look at this. I mean, the 5-minute chart shows it pretty damn well. You see the mix here of green and red bars, bull and bear bars, mixing together after this big dump off. You know, we talked about that way back here. It's, you know, it's not unlikely you see kind of a flattening out as bulls gain more confidence. Still descending. That's what we're paying attention to. What's up, Davids? I did. I hope you did as well. It was a great weekend. Bears are trying here, but look. Only reason I drew this, by the way, is because I know that some bulls are going to be looking at this as a potential hope zone, which I'm not into. Again, I want zero reason for the bulls to have much confidence at all. So if we can get a nice low close on this bar, roll over, nice low close on the following bar, that'd be a beauty of a setup for me. 50 seconds out from the rollover of this 2-minute. You can see the bulls are seeing that. They're wicking that up, trying to hold it. There's a lot of wicks on the bottom, which, you know, by the way, tells me the bulls are trying. They have not given up by any means. I mean, we're down 2.7%. I'm just waiting until we get a clean, either descending resistance, ascending support, or some kind of clean continuation without a descending support in the way. Not a lot to ask for, but just gotta wait for that window to open. Here we are testing that trend line that we drew right now. See if we can break that. And I just want the bulls to be in a temporary moment of like, okay, we give up. That's when I enter. I want zero hope from that other side. At least as close to zero as you can get. All right, good. Close of this bar at 1 minute and 6 seconds out. I would need to see the next bar though, just because of that wick on the previous bar. "42 seconds out. "10 seconds out." You see the buyers wicking that back up. They're looking at that. They see it. Here comes the rollover. All right, 1 minute 37 out from the rollover of this 2-minute bar. Could this be a setup for us? There's an attempt at a little bull reversal. You guys see that? We've been getting that a lot today. Volatility's down. Again, we're in the mid-20s right now, so those weird little are not going to be uncommon, especially here during tariff talk. "60 seconds from the close of this 2-minute here. While we wait to see if the market gives us something, listen, if you guys haven't done so already, please press like on the stream here. It does help out a lot. Okay, 42 seconds out. We're getting some bizarre wicks here. I got 30 seconds out. This is going to be a discretionary call either way. I'll get ready just in case. And I will get short there on that rollover, so I'm now sitting short. You see that? We're about 5 points, 10 points in the money. A bit volatile here. Here's all the looks. Okay, so again, average price there, 17,851 and a quarter. Stop up at 17,891 and a quarter. And take profit down at 17,811 and a quarter. We are filled in all the accounts, obviously. About 5 points in the money. That 850 level, by the way, that's a tier 4 level. I'm not too concerned with that level. By the way, with ATR at 25, we'll see how price action goes, but I'm not against if I have to take this thing early at negative reward to risk, just higher win rate, obviously. But I'm running 40 and 40 as it sits right now, but that could change. in the blink of an eye, depending how we look. All right, 10 points in the money, 12 points in the money. If you're just joining us, I'm sitting short at 17,851 and a quarter. Taking this one a little bit more bar by bar than normal just because of lower volatility right now. All right, we're about 18 points in the money. That ATR at 24, so it's a little light. A little light on the range here. Kind of slow. Again, average here is 17,851 and a quarter. Kind of taking its sweet time here. About 15 points in the green. ATR continuing to fall a little bit here. Due to this lower volatility, I may end up pulling this one negative reward to risk. We'll just see. Again, take it bar by bar. I want to have a reason to do so. I am ready to rock if I need to. This bar turning into a bit of a doji. We're getting a nice little mix here now. Bulls trying a reversal sequence, still closing inside of the high of the previous bar. Now, Mark, how much the market's down each day, on the day I should say, has very little to do with it. This is just bar by bar price action. The primary reason I would take it early, if I do, is that the range on these bars is really sucking down. So asking for a bigger outsized move is kind of a big ask to make out of the market. Sitting a little bit in the green, pretty much break even on the trade right now. Again, average is 51 and a quarter. 10 points in the money now. Still sitting 10 points. Need to push down toward 830. That would be helpful. You can see we're starting to flatten out a little bit. We might be seeing a baby version of what we saw earlier this morning. There's the push down toward 830. Still in the trade here. Just watching this 5-minute bar turning into a doji. Okay, so now that we're seeing the bulls step in a little bit, I'm going to leave my target at 17,811, but I think I will take it off if we see a break of 17,830. If we see another break of that, I'll pull it. But I'm leaving the order down at 811 in case we obviously get some big news bar. I want to capture that move. So that early take would be manual. It's not set yet. Bulls trying to take this back upside. We could see a little flat bottom here forming. Yeah, we're about 8 points, 10 points in the money. But little flat bottom forming. I want to see how this test goes. 15 points in the green. ATR still falling, coming down into 23 now, which is a little below my ideal range. So low 30s here, I get interested. Again, range is tightening down bar by bar. We're now at 22.5. Again, sitting short if you're just joining us. 17,851.25 is the average. Willing to take it at about 20 points just because that ATR is shrinking. But I really need to see a test of that, a retest of that little flat bottom that's forming on the 2-minute for me to be willing to do that. Bars turning into dojis. Not a huge fan. Target moved to a attempt at a downside break through that little flat bottom there. Target now sitting at 27.25. You can get one little push through that flat bottom. I'm fine pulling it. There we go. And we are out. Let me flatten. Okay. So we're out there. Again, ATR is really tightening down. So I took it off at, what was that? Maybe 0.6 to 1 reward to risk, which is negative, which is fine. Okay. Most of my trades, I think pretty much every trade, at least in the morning in the last couple of weeks, has been 1 to 1, but the win rate has been outstanding. But today we're seeing that range just tighten back down. So my 1R lately has been about 2 grand. So this is where we currently sit. So we made 1R earlier, and now we just made about a half R, maybe a little more. So that's where we currently sit, up 3,085 on the day. So a couple of decent trades here today. They haven't been the cleanest trades ever, but that's okay. I'm fine with that. Now again, guys, if you're going to take trades, here's what I think you should do. If you're going to trade at all like me. You should go into a trade with an idea of a reward to risk. And then if you need to, like if range is really tightening down like you saw, that starts to cause some issues. And you're making an outsized ask of the market. So you guys have seen on the stream over the last couple of weeks, that right there is the first trade that I've taken early in, at least on the stream in weeks. In the afternoon, it gets a little more common, and that's because that ATR starts to fall, like we're seeing right now. I mean, ATR, that was a good move to take it early. ATR has now fallen to what, 21? And you guys know, my sweet spot, I know, is going to be between 25 and 70. Above 70, my edge starts going down. Below 25, my edge starts going down, and I know that. So I pull that off as we dip on the ATR, and that's fine. But you need to have a reason to do that. If the range is right in your sweet spot, and there's really nothing wrong with the trade, taking it early most of the time is going to be an emotional decision. Try to make it as less of an emotional decision as you possibly can. Forbes, bad time to enter? Well, it depends on your strategy. For me, with the ATR now falling below 25 and sitting at like 21, it's not the greatest entry here, but I'm still watching. I'm not necessarily done on the day, but anyway, this is where we sit. So, it's been a pretty good day. Decent. Let's see if we can get anything else here. I want to see that range start to expand a little bit. But I will be back in 2 minutes. Don't go anywhere. All right, we are back. K-Bat says, I made 3K earlier, wishing I didn't get out. So, this is actually a very good time to have this brief conversation. Now, I could be looking at the market right now and saying, oh, damn, if I had just left my target at what I think 811 and a quarter, we would have hit for a full winner rather than a partial. First of all, it's not a partial because it's part of my plan that sometimes I got to take things early. That's also a horrible mentality because just get your piece, trade to the best of your ability, make as few emotional decisions as you possibly can, have a reason for the decision making, and you should allow those things as part of your plan if it makes sense, if it's not an emotional decision to do so, and then just forget about it and trade the market as is, as what comes. It's a really awful mentality to think, no, here, let's actually do this. So I took the first trade of the day, I took a short. Somewhere in here, right? I could think, damn, I could still be in that. That doesn't even cross my mind. I took profit, I traded my plan, I got my piece, and I left. That's all we're doing here. You can see ATR now at 20. It's getting lower. Joel, I spent my emotional capital for the day, and I'm enjoying just getting the lessons at this point. Skeptic hit my funded futures daily goal, and I'm out for the day. Good work, guys. Good work. Now that range is really tightening down, which is going to cause a problem here for me. I still want to see if there's anything else I can grab here. But ideally, that range would start to widen up a little. What's up, Samuel? How you doing? That's 17.8, by the way. It's going to be a tier 3 level. Not too concerned with it. Errors just keep taking this thing lower. This is one of those kind of slow, I hate to call it a slow grinding move because I mean we're down 3%. You're getting some bull confidence mixed in. I mean, you look at the 2-minute chart, you got some wicks mixed in there, right? This isn't an incredibly strong bear move. It'd be tough to make that argument. TV, starting my Apex journey next week. Cool, Debo, what are the different tier levels? So S tier, Comes around quite infrequently. It's going to be like 18,000, sorry, like 20,000, 25,000, 15,000. Tier 1 is like the $1,000 levels, 18,000, 19,000, 21,000. Tier 2 is like 18.5, the 5 levels. 17.5, 16.5, 21.5, right? Tier 3 is going to be the like hundreds, right? Like 17.9, 17.8, 18.1. And then tier 4 is the 50s. 17.850, 18.150. Still worth watching, but the lower you get on the tier level, the less relevant I believe they become. K-Bet, yes, I am live every day, 8:15 a.m. Central. Every single day. Subscribe to the channel, please. Chris, would you consider, this is a good question, would you consider taking a trade to the upside now that we're down 3.2%, just because it's kind of unlikely that we'll keep moving to the downside more than maybe another percent? No. No, you can take bets on that, and I know of traders who do take bets on that and make money, but the way it ends up looking is this. It's very, very high reward to risk, very low win rate. So the traders that I know that do this successfully, as you get lower and lower and you pull further and further away from that mean coming into the day, they take very small size with relatively tight stops, and they're basically just trying to catch the bottom. What ends up happening is you get stopped out a lot, and then sometimes you catch a winner. Now, there needs to be some kind of rhyme or reason as to why you enter. Maybe it's an ATR-based entry, like a deviation from the range, right? But that is a very high reward to risk, very low win rate strategy. If you're into that, best of luck. But what happens to most people when they try that is they just enter and then they don't stop themselves out tight, and then they just lose a bunch of money. So, very fine line, be careful. Captain Obvious, I've tried playing that reversal and always get chopped up even with tight stops. Yeah, very low win rate, very high potential reward to risk if you're able to catch a winner. But again, anyone I've ever known who has made that work has a very, very well thought out process as to why they enter. And it's never, hey, it's like pretty low right now, let me try to buy it. There's usually some kind of, okay, we're deviating this far from volume weighted average price, or we're deviating this far through the average true range of the last 5 days, right? Or something of that. It's usually one of those. Just saying, hey, you know, it's down 3%. That seems like a lot. I mean, look at last week or more the week before. It doesn't have to be a lot. And once you start getting into that 4, 5, 6% territory, it can be a slippery slope, and then you end up just losing more if you didn't stop yourself out. If you want to play that game, again, feel free. Just understand what you're doing. Low probability, high reward to risk, and you need to have some kind of rhyme or reason as to why you're taking the buy. Or the short, for that matter, if you're doing it the other way around. The bull's trying to step in here and create a little bottom. That's creating another flat bottom. See if they can pull it off. K-Back, can you explain a little why you don't trade off the candle but the numbers on the side? So I am trading off the candle. I trade price action. I think you'll catch on to my style the more you watch. The numbers on the side, though, I just throw out there as far as tier levels for context. Like, I wouldn't necessarily want to take a big bullish continuation setup right into 20K. Okay, that's a factor that I would need to consider because I know that some bears are going to try to defend that level, for example. But bull's really trying to get a reversal up out of this hole. There's a big bull bar closing near the high. Again, just one. For reversal sequences, I need to see 3. For continuation with the trend, the short-term kind of zoomed-in trend, right? 2 is sufficient. But here, I would need to see 2 more big bull bars closing near the high, and we would need, ideally, to clear not only, of course, the 20 EMA on the 2-minute, but also that 20 EMA on the 5. Well, this is where we sit so far here. Again, 2 trades. Up 3,085 bucks. See what the rest of the day here brings us. Listen, guys, Apex 80% off is back. And it is a hell of a deal. 80% off, single day pass. Make sure you use code BIG. We were waiting for that to come back for weeks. And it finally did. Hey, if you're more into daily payouts, Take Profit Trader is a wonderful way to get that. Same code BIG, 30% off and no activation fee. In a lot of cases, depending which account you choose, it ends up being a little bit cheaper actually, which is cool. But I think a mix of both Apex and Take Profit is probably the way to go, which is what I'm doing. So anyway, guys, hope you guys have a great rest of your day. Again, this is where we sit. And I will see you all back here tomorrow morning, 8:15 a.m. Central Time. If you have not done so already, please subscribe to the channel. And I'll see you in the morning. All right, guys, have a great rest of the day. I'll see you tomorrow.